Hey guys, what's up? We're here for another weekly watch list. Gonna go over what we're looking at this week. So let's jump right into it. We got earnings here this week. Honestly, do I need to say anything? We really don't have anything for what we trade here personally, for what we do with scalping. So just skip right over that. When it comes to news this week, we do have some notable stuff here coming off Tuesday morning. Monday, not so much. We got CPI, what have you, but it's more Canadian. We got the retail sales for USD. Wednesday, honestly, not a whole lot again. We just got building permits, crude oil. Thursday, again, not a whole lot. Unemployment claims is going to be our only thing here. So news at 8:30, nothing really around what we're doing at existing home sales at 10 a.m. And then at Friday, again, we don't have a whole lot here, Canadian effects. So that's about it. I mean, news and earnings this week is really slow. And honestly, our watch list reflects that this week. Jumping right into the markets here, ES. We're looking at upside here. We have upside this week. We're not looking to see, hopefully, any consolidation into this week. I'm hoping to just kind of see continuation here on this given week with ES. I want to see the 56.42 level break. I would also like to see our other core levels here at 56.55, 56.70, and 56.85 break as well. I don't think we're going to get anywhere near all-time high here, but we are seeing a pretty heavy rally here. So what I'm hoping to see is continuation this week and not going to chop and maintain the same area here on the volume profile. You can see this price range is very heavily diluted with an excess amount of price action and volume. So I really don't want to see us maintain this price action area. We're not going to get a whole lot of great continuations probably with our setups. If so, I want to see a better market this week. Coming off of last week, we had a pretty good rallying week for upside moves for sure. Thursday and Friday back-to-back Tesla, almost identical trades, both paying 35%. In some cases in earlier entries, anywhere from 40 to 50% ROI. So, we had some very clean moves last week. Definitely a great week, to say the least. Let's go into NQ this week. Looking at the markets this week, again, I just kind of have a little bit of an ascending wedge here developed. It's just showcasing what we already know here, right, from ES. Is going to be our upside rallying here and hoping to hopefully see some continuation here. I'm hoping to see the break of the 20,000 mark this week and not see a rejection. That would really be unfortunate. If we saw a rejection, like I said, it's going to probably put us back into a chop range. If you see rejection, probably just consider to continue to consolidate. So I'm looking to see that break. So are going to be some notable levels here, as you can see. It's definitely going to be at our 19,650 level and 19,715 level. That's going to be the more significant one of the two. This one's really showcased a lot of rejection points on this time frame, on the 1 hour as well. You can see it just basically always loves to wick above it and go right back down. So, especially with this rejection, obviously we had a pretty heavy rally. It's very similar to now, just met with a massive rejection following it. So I wouldn't even be opposed to that type of rejection. What I would be opposed to is seeing something like this happen after that rejection, right? So we don't want to see that. This week, really honestly, limited setups. So Google is going to be more of a side watch, if anything, but it is still pretty decent quality to me. Given the zone and our volume, we're not very diluted here with our price action. It's not too heavily oversaturated with prior price action. So 160 is not too bad. I'm looking to see this more close open because we lose volume on Google very, very quickly, typically. It's not ever always the case. Like with our downside moves here these last few weeks, we had some pretty insane moves around 11 a.m. mark with heavy volume backing it. So it's a rarity. From backtesting, you're not going to see that. These were some pretty decent exclusions here. And of course, I caught a couple of these. You just had to be alert and on point for those. I'm not going to be looking to take this too far out, 158.38, unless we see some really interesting price action that I like, that I'm looking for how I would want to see this as an earlier entry. I'm not going to be taking this likely until 159.45, okay, because I need to make sure my risk is in check here. And taking it that far out, we could allow for a lot of potential rejections, given this is a very slow-moving stock, right? So a typical trade on this for me, I'm usually only in 1 to 2, 3 minutes on most trades, sometimes up to 5. I scalp, so I'm not holding for too long. This company averages anywhere from 10 to 20 minutes per trade that I've taken on this from my previous trades that I've held through. So I'm not looking to take this too far out, right? I'm looking to definitely take this closer to the level. If anything, like I said, 160 here is going to be the target level. We could definitely look to target a pretty close level. I'm not trying to hold this super long, given what it is. I've scalped this company upside always. I never really hold upside. It doesn't like to do much of a continuation. You can see a lot of we're on our downside trend here. Obviously, we're in a pretty downward momentum based kind of trend, so not something to see. We're breaking the trend, as you can see here. But even so, I mean, I've traded this company for 2 years now. I've not seen almost any really great continuation upside plays. Downside is another story. It's totally different. But for upside, I personally really don't think I'm going to be holding much past the 50 cent. Honestly, I'll probably be scaling out at 25 cents at 160 break. Playing this close, 159.45. I need to see that break and hold above, and then I'll be considering entry from that point forward. And then, like I said, 25 is a scale out, and probably 50 cents is my close position. So I'm not really looking to hold this too long. So my top picks are going to be Meta, Netflix, and Tesla this week. I don't really have many side watches, so I'm not even going to include them. And if I do have any, they are very, very low quality for where I stand. I probably personally wouldn't even take them, so I won't even be including them in this watch list for anybody to see. So for Meta, what I'm looking at is the 530 break. I have 527.17 level charted out here as my initial to take a look at this. We also have, I think 528 as a nice level of resistance here, 527.94. I would be looking at this at this point. I don't know if I would be in. More than likely not. This is still a little far, but depending on how it sets up, that would definitely be a consideration. Before 529, definitely a potentiality. It just kind of depends on how we approach this off open, right? So I just want to see how this sets up. It always has to set up right. I know I sound like a broken record when I say this in my watch list, but you have to make sure that you're playing this, very wise and with the best risk management as possible. So depending on your percentage accepted stop loss, that's going to base your risk to reward on this and your target you have to hold to. If you're going to get in at an entry where you have an accepted potential 15 to 20% loss, your risk to reward should be 2 or 3 to 1, 40 to 60% ROI in that potential trade. To make it valid, right? To be worth taking. So that's what I'm looking at on that. Probably 529 break potential entry. If it doesn't do that right, if it takes longer to get there, we had a lot of wicking recently. Price action. I'm going to be looking to take it really close to the 530 level. This is breaking out of a pretty high density volume area on the volume profile, so this would be a pretty good move to actually hold for continuation. I would probably be looking to hold to 531 personally. I'm not sure if I would be scaling out at 530 break. It just kind of depends on how strong the break is. I want to see a pretty heavy break so I could catch a decent volatility premium flip. I want to see that kind of just, pay for that flip. There'd be no point to me actually getting out of half my position scaling out there if we didn't break clean, right? Because the volatility spike would be so low. Contract premiums wouldn't do much of a backflip at all. So my risk to reward would be off as a result. And that's why I need this to... in order to scale out there, I would definitely have to be taking half off the board with a heavy break. So going into the next setup, we actually have Netflix here. We're approaching all-time highs again. We don't usually touch this company much more than a few times a year, but when we do, this is a company to definitely not play around with. It's a company to be very on point, to make sure you're ready to go for it. Sizing accordingly. Spreads are heavy, pretty wide, 15 to 20% even at times off open. It can be even more, excess of 30% spreads. We also see notable low volume almost all the time on these. So what we need to be looking for is we need to be making sure those are good, especially this is close to open. I will not be taking this off open. This is a heavy risk trade. If it is off open, it is just unacceptable amount of risk. Your loss could be insane on this. And it's, regardless of sizing, I'm not going to be taking it if it does that off open. And what we're referring to off open is going to be two separate levels here. I wouldn't even be looking to take this as one trade personally. In stock hours, we were kind of talking about this. And it's the exact same thing where 704, I'm going to be looking at this as a separate trade from 710 break, right? And even potentially considering 709 or 707.89 rather, sorry, the 708 level break as a totally separate trade from 710. So there should be three separate trades this week we look at. We have a pretty notable downtrend here on the 1 hour. This also does translate to the 4 hour though as well, where this when we break above this and hold this showcases a pretty heavy inclination to upside and definitely a good indication to see some continuation within our trades here. So I'm definitely looking at the 704 as its own trade into 705 as the break as a target, just to keep risk in check on this. That loss could be larger, so I definitely got to hold longer on this one until 705 just to validate my risk to reward on this and make this a realistically valid trade. And then looking at the 707.89, really the 708 level. As well as the second trade into 709, and if this really sets up right into the 710, at that point though, $2 is a decent amount. I don't know if I would be holding to the final all-time high. That would probably be my last scale out if I were in anything of a third of my position left. at the break of that. There's no chance I'm holding past a high because that's always a great point of rejection. So just the likelihood of rejection is pretty highly likely. And if that's continuation, great, but I'm not going to be there to hold it, right? I'm not taking that risk. Looking at Tesla here, we do have a 4-hour or daily gap right here from pretty far back. It starts at 735. It's a $10 gap. It's 246.32 here. Going to be looking at the 235 level more than anything. I don't really have anything other than the 235 level personally this week. As of right now, we probably will get some setups. 232.81 going to be really looking at this. Probably not going to be taking entry until more closer entry like 233.92, like the 234 break would be a pretty perfect entry in my eyes if it sets up properly like that. We have some decent wicking here at that given level that I was just noting. So to me, that would be a pretty solid entry. It would give you really valid risk to reward. Hold to the 236 level, and at that point be out of the position. Probably scale out on the break on Tesla. Have had a lot of really good trades off this company and understand Tesla pretty dang well. Really easy company to read. So for me, that's kind of how I'm just looking to approach this week with the companies. We could always get more setups. That's just how every week goes. But as of right now, these are really just my top picks. I don't have a whole lot else. I'm not really looking at anything downside on Tesla. As you can imagine, if you look here, we have an insane amount of volume density here, as well as the upside here past 235 level. So likely after 235 breaks, if it does, I'm likely not going to be taking anything on Tesla the rest of the week, albeit we do have a gap here, maybe 240. We do have a bit of a reduction in the volume there compared to the rest. But honestly, it's just got to set up right for that. And 240 is just honestly, it's just in a really heavy, saturated consolidation area there. So we'll just kind of have to see on that. But for now, it's just 235 for the week. Overall, guys, that's going to be my whole watch list. I'm not looking at a whole lot this week. Like I said, we have some pretty high-quality setups here with Tesla and NFLX. Meta and Google are looking okay, and then not a whole lot of side watches this week. I couldn't find anything on my baby AMD. I just couldn't find a whole lot. So definitely a decent week. Just let's keep doing what we always do. Let's go on take a position smart, scale accordingly. Don't take unnecessary risk. I've actually recently reduced my watch list here. As you can see, it's only about 9 companies. I really don't feel it's wise to take subpar company trades at this point in my career on the trading. It's just not worth the risk, worth the loss, potential dollar loss. It's honestly worth more so just staying cash that day or not taking that trade and just having whatever it is on the higher quality setups like we have here noted that have a way higher probability of continuation and following through and hitting your targets and being a profitable trade, of course. Most importantly. So for me personally, I don't really have any interest in taking subpar companies. And, even if they're a high quality setup, it's ultimately still going to be a subpar company, right? So I'm personally looking at this week like that and probably every week going forward on this. So that's going to be it for this week, guys. I appreciate you watching this video. Leave a like, comment, subscribe, and give me some suggestions as always for new video ideas.